I lost $11,000 in 72 hours. Not because I was stupid, because I trusted the smartest people in the room, and they were all lying. I'm not here to tell you crypto is bad. I'm here to show you what nobody else will say out loud. Stay with me for the next few minutes, because what I'm about to break down could literally save your financial life. Before we go any further, let me be real with you. I've spent the last 6 months going deep, talking to investors, reading bankruptcy filings, digging through court documents. I didn't make this video to go viral. I made it because I wish someone had shown me this before it was too late. By the end of this video, you'll understand why crypto still has zero real-world adoption after 16 years. You'll understand why over 3.7 million cryptocurrencies have already gone to absolute zero. And you'll know the one question you should always ask before putting a single dollar in. Let's get into it.
Here's what the crypto industry doesn't want mainstream America to know. Bitcoin launched in 2009. It's been 16 years. 16 years and you still cannot buy groceries, pay rent, or grab a Starbucks with Bitcoin. Out of 350 million businesses worldwide, only around 18,000 accept it. And most of those, they immediately convert it to dollars the second your transaction goes through. That's not a currency. That's a collector's item with a very expensive PR department. Now here's where it gets interesting. The crypto world will tell you, okay, fine, it's not a currency, it's an investment. Cool, let's talk about that. Bitcoin's annual volatility is 60%. The US stock market averages 15%. That means crypto swings 4 times harder than stocks. That's why real money managers, the ones legally required to not blow up their clients' money, recommend putting 1 to 2% of your net worth max into crypto. 1 to 2%. That's not a portfolio strategy. That's a lottery ticket. And if you think picking the next winning crypto is a skill move, listen to this. CoinGecko tracked over 7 million cryptocurrency listings since 2021. More than 3.7 million of them are now completely dead. Gone. Zero. Not down 80%. Zero. That's a coin flip. Literally. Heads you lose, tails you might break even. Then came the stable coins, designed to never crash. Terra and Luna. Marketed as revolutionary, safe, stable, backed by math. In May 2022, the whole system collapsed in 1 week and wiped out $45 billion in investor money. Regulators called it one of the largest wealth destructions in modern history. And then came FTX. If you don't know FTX, it was the NYSE of crypto. Super Bowl ads, celebrity endorsements, Sam Bankman-Fried on the cover of Fortune magazine being called the next Warren Buffett. Turns out they were stealing customer deposits and gambling them away in a sister hedge fund. The bankruptcy examiner, the same guy who cleaned up Enron, said on the record, "Never in my career have I seen such a complete failure of corporate controls." This isn't bad luck. This is a pattern.
Look, I get it. The idea of crypto is beautiful. A system outside the banks, outside the government. Money that belongs to the people. That dream is real, and it's valid. But what's been built in that dream's name, that's the problem. What's been built is the biggest speculative casino of our generation, where insiders get rich, retail investors get crushed, and every time it collapses, the answer is always the same. How could this happen in an unregulated, anonymous industry built entirely on trust? So here's where I land. I'm not saying never touch crypto. I'm saying know exactly what you're holding. Understand it's speculation, not savings. Understand the odds are stacked. And never put in what you can't afford to watch go to zero overnight. The smartest investors in the world treat it like a casino chip, not a retirement plan. If this video made you think twice, made you ask better questions, or helped you protect even $1, that's why I made it. Drop a comment below and tell me, still curious or hard pass? I want to know where you're at. And if you want the full breakdown on how to actually build wealth without gambling your future away, that video's dropping next week. Subscribe so you don't miss it. See you there. In the last 5 years, more than 3.5 million cryptocurrencies have gone completely bankrupt. Billions of dollars, real people's money, gone overnight. This is not a conspiracy theory. These are the documented facts that the crypto industry hopes you never connect. I've spent months analyzing blockchain records, bankruptcy court filings, and institutional investor reports to bring you a clear and honest picture of where the crypto industry actually stands today. This video isn't emotional, it's evidence-based. And by the time we're done, you'll have a framework for evaluating any crypto claim you ever hear for the rest of your life. Chapter 1. The Currency That Isn't. Bitcoin was born in 2009 with one promise: to become the currency of the people. 16 years later, of 350 million businesses worldwide, approximately 18,000 accept Bitcoin as payment. That's 0.005% of global commerce, and the majority of those businesses immediately liquidate Bitcoin to dollars at point of sale. By every functional definition, Bitcoin has failed as a currency.
Chapter 2. The investment that isn't stable. Proponents then repositioned it. It's digital gold, a store of value, an investment. The data doesn't support this narrative either. Bitcoin's annualized volatility is approximately 60%, compared to the S&P 500's historical average of 15%. Risk-adjusted, institutional asset managers allocate no more than 1 to 2% of managed portfolios to crypto. Warren Buffett described Bitcoin as rat poison squared. Jamie Dimon, CEO of JP Morgan Chase, called it the pet rock. These aren't random opinions. These are the people who move trillions of dollars for a living. Chapter 3. The Mathematics of Failure. CoinGecko, one of the largest cryptocurrency data platforms in the world, tracked over 7 million coin listings since 2021. Their finding, 3.7 million, over 52%, are now classified as dead, not underperforming, dead, zero value, zero trading. This is not a market correction. This is a structural failure rate that exceeds almost any other asset class in modern financial history.
Chapter 4. The Stablecoins That Weren't. In response to volatility, the industry created stablecoins, assets pegged to the US dollar and marketed as the safe option. In May 2022, Terra-USD lost its dollar peg during a period of market stress. The cascading failure of the Terra-Luna system wiped out an estimated $45 billion in investor capital in under 7 days. Regulatory bodies described it as one of the largest single wealth destruction events in modern financial history. Chapter 5. The Exchange That Wasn't Safe. FTX was not a fringe platform. It was the dominant crypto exchange in the United States, backed by Sequoia Capital, endorsed by celebrities, and featured in national Super Bowl advertising. Its CEO, Sam Bankman-Fried, was profiled by Fortune magazine as the next Warren Buffett. In November 2022, FTX collapsed. Bankruptcy proceedings revealed the systematic misappropriation of customer deposits, funds transferred to a sister entity without customer consent or disclosure. John Ray, the restructuring attorney who also managed the Enron collapse, stated for the record, "Never in my career have I seen such a complete failure of corporate controls."
The consistent thread across every major crypto failure is not bad luck. It is the absence of accountability, the absence of regulation, and the presence of extraordinary financial incentives for insiders at the direct expense of retail investors. The underlying blockchain technology may yet prove transformative, but the current cryptocurrency industry, as it operates today, functions primarily as a speculative vehicle, one that has historically rewarded early insiders and systematically harmed late-arriving retail participants. That is not opinion. That is the documented pattern. Before you invest in anything, ask one question: who profits if I'm wrong? In crypto, that answer is almost always someone who got in before you.
If you found value in this breakdown, share it with someone you care about who's been approached about crypto investing. Every source referenced in this video is linked in the description. Verify everything I've said. That's not a request. That's the standard every financial commentator should be held to. I'll see you in the next one.